Right then, so countdown to the FOMC minutes. The US dollar is offered. Now, I talked about this W formation. If it was able to get through that resistance, we were looking at the 61.8, potentially higher. But the PMIs, the business activity, has disappointed in a massive way this morning ahead of the data. Um, we had the composite PMI 46.3 against 47.7, and then we had the S&P Global Manufacturing PMI 47.6 versus 50, and that's a huge miss. And services was 46.1 versus 47.9. So pretty poor outcomes there. The rest of the data was all right. Durable goods. We had some housing data, um, but the PMIs were the clincher really. Now that sent the dollar into below this neckline, and a break of 106 will be significant. So the key thing now to look out for in these minutes um, is whether there's going to be a firm pushback in the language of the supposed Fed pivot. Um, in the statement, the Fed said, in determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. So, so that came in contrast with Fed Powell's press conference when he signaled a higher terminal rate, top for rates. Now, given we have started to see less inflationary outcomes within the data um, of late, the minutes could well note that and give the nod towards a pivot. So that is where the the meat on the bone will be today. If the dollar can catch a bid, technically, um, this would then be looking very bottomish, and we can fully anticipate a move back up in towards 109. And just briefly, so we had the RBNZ, and in the previous video, I talked about how the Kiwi was likely to move higher, being on the front side of this trend line. So we've seen that. That's played out. Um, Moving to the Stacey Burke template. So we've seen the reaction there. This was the RBNZ. This was the pullback. This was the range expansion. This was the day two runner. Higher high in London. Pull back into longs, and for a nice squeeze out of there with a very firm bid in the US session, with the data there helping it along, and fundamentally tallying up, technically tallying up, and would have been a great trade. All the while being on the front side of the trend. Now, with regards to the FOMC minutes, gold has been expanding its range. Um, this looks to have potential. Now, be prudent to wait at least 15 minutes until after the release, and the avoiding the volatility um, as the market digests the minutes. But we'd be looking for setups in gold depending on the outcome. So at the start of the week, the usual pre-open analysis for gold, we talked about 1750 and then 1720. So we've already seen that play out this week. We've moved into the 1720s, 27 the low so far in this weekly correction of the impulse, which was mentioned over here. So we're currently tapping into last month's high in a, what is this? This is a 61.8. Um, I think I'm going to favor the upside at this point. I'd say that we've made a peak formation on this chart to the downside here, and we're coming lower to move up and break out of this range to target all the way back up. Um, this appears to be accumulation. Now we're trying to slide out to the backside of the downtrend. We have this W formation. So we've got that W formation here, and we can be targeting 50 for the day ahead and beyond. So that's the target area for a first green day. So just sort of eyeing this then. This is gold. So we've got this trend line here which has been broken. Draw it with a broad brush really, depending on how it wants to be done. But anyway, we're on the back side of this downtrend. That's very plain to see. We've got this sort of harmonic pattern coming in to move up again. So in the meantime, if we were to hold here, it seems like a reasonable confidence area to do so. Move up to come back down, in a deeper retracement, maybe into here before a move up. But anyway, for the meantime, for today, we could be looking towards the mid 50s for that correction up.